Hey, Rick here with your market recap for Tuesday, October the 4th. After decidedly red, our risk model was decidedly red for the past 2 weeks. It actually turned green on the very short-term moving average, the 8-day. So we had a very strong day today, followed, and yesterday was a very strong day as well. But it's nothing to get excited about quite yet, which we'll show you here in a sec in the charts. But at least it's a step in the right direction. Let's get this out of the way. So we'll start with the S&P, and after two solid days up, this move is almost 5%, or a little over 5% in the last 2 days, which is very encouraging. But you can see this is the 8-day moving average here. It's just curled up, and the price is yet to get up to the declining 21-day, and then we're still well off the 50-day and the 200-day moving averages. Similar picture for the QQQs. Up in no man's land, as I call it in here, between the 8 and the 21-day. So going in the right direction, but makes it really hard to buy, especially when we're so extended, up 5% in 2 days. Mid caps and small caps actually fared better. They're up 4% today. This is the mid caps here, and the mid caps have actually now closed above the 21-day moving average, and it's starting to tick up. And similar story with IWM, the small caps. They're above the 21-day, but still below the 50. So more money seems to be flowing into the smaller names. Part of that is some of the big guys like Tesla, which makes up a big component of the S&P, has been down bigly here for the last four days now, and even Apple. It was up today, gapped up a little bit, but still hasn't got above the 8-day moving average. So this is definitely charts I want to stay away from. For those of you that are 100% cash, again, in my view, there's no point in buying anything quite yet. The charts are just not ready. However, for those of you that are still holding some or a lot of positions, I would consider these last 2 days as sort of a really good gift. Your portfolio, if you're 100% invested, would be up about 5% off the lows. But what's established here is a really good base. It shows up as well on the weekly chart. What I would worry about is that if price gets below these levels here on the weekly chart, as I discussed in a previous video, we could see another 10 to 20% decline from here. So although you're down a whole bunch for the year, I don't think any of you want to experience another 20% plus decline from these levels. So what I would suggest is you place stops about 5% lower than where we are today, which would take us underneath the low that was set last Friday, I guess that was. Because if price takes out that low, odds are really good. This is going to head, let's expand this out. Like we talked about, this could drop all the way down to 320, and even 300 is not out of the question. So that's a 15-20% drop from here. So you've got a bit of a gift here. Or another method might be, if your advisors can do this for you, put in a trailing stop of say 5%, so you can ride this up. What I anticipate what's likely to happen, so I'll just draw this out here. This has been a good move, but we got headwinds here. You have a declining 50-day moving average, and you got the big daddy up here, the 200-day moving average. And if we extend this moving average where it's going to be in another 10 days or so. I think it's probably going to do something like that. Oops. So in 10 days or so, the moving average is going to be there. So if we draw a line of, a great scenario, if you're really bullish, the price could go in a stall a little bit here around the 50, and we could come right back up here. But it's going to be really, really difficult to see a scenario where you're going to get past this 200-day moving average in the first swoop. Odds are really good that you're going to have a pullback here, and we come down, and then the best scenario is that it stops somewhere around here and then continues back up again. But what we want to protect ourselves against is where it comes down here and then just keeps on going south. You want to protect yourself against that. So we keep our eyes open for what's we can't guess what's going to happen. We just have to react to it. But this is a plausible scenario. Going back to all-time highs, getting back on the weekly chart, back up in here. My personal opinion is we got a couple of years to go to get up there. So it's going to take a long time to get this back. And the big worry is, of course, losing another 10, 20, 30% on the downside. We would need to protect ourselves against that. If I look at the inverse of the spiders, a symbol called SH, it's basically shorting the spiders. This actually looks like a better chart. We're in an uptrend. The 200s are moving up, the 50s moving up, the 21-day moving up, although it is starting to curl over. Again, if this were a stock, it would be should be catching our attention. Excuse me. Sorry for the distraction. In fact, now I've sort of forgot where I was at. But basically, if this were a stock, it'd be mildly interesting. I mean, I don't really like this particular pattern, but it definitely is in an uptrend. And as it pull back here, odds are it's going to find some support either at this moving average or this one, and then start turning back up again. Well, the problem with that is this is an instrument that is short the S&P 500. So as this stock goes up, that means the market is going down. So if I compare the two charts, this one versus the SPY, this one is clearly in a downtrend. I'll get rid of my squiggles over here. This one's clearly in a downtrend. So I'm just not interested in buying it at this point. It's just way too risky. For my style of investment is that these moving averages got to be moving up. So that's kind of why I say if you're in cash right now, stay in cash. If you're not in cash, I think we've got a logical area here to place your stop for your most of your portfolio, and then regroup if this market turns over and you get stopped out and put into cash. Not a big deal. You got time to regroup and look for some better opportunities. Before I left, I think I had three positions, which I'm going to briefly discuss. They all with very tight stops. One was Northrop Grumman, NOC. I got it in here, and on this big day here when it went down, I got stopped out for a tiny little loss. And while I was away, I didn't re-enter it. So it hasn't really got away yet, but again, I wouldn't be buying it here. The next one, the other two have done really well. NBIX, I got in here at 100 on this day when it failed to break down. And I exited some yesterday and the rest of it today. I almost got top tick today. So this one, I'm waiting for it to reset, come back into here, tighten up a little bit, use my tools. It would be good if this can just tighten up in here, come back a little bit. and then head back up again out of there, it'll be viable because it was technically viable above 109. I didn't add to my position. In fact, I exited my remaining position. And then AZPN has performed very, very well. I was in here at 221, down in here somewhere. I've exited 3/4 of my position. This is getting a little parabolic now. So I've got a really tight stop. And again, my hope is this one will, if I get stopped out, it'll tighten up, come back down in here towards the moving averages, and then reset for another entry. And have another go at this one. But captured a 10% gain on this one. So despite the really crappy market, there are some needles in the haystack, if you like. And this one worked out very well. Looking at the sectors, there's just no sectors that even interest me right now, which just reinforces the notion that the whole market is crap. But there are lots of stocks setting up. Some really good patterns are starting to set up, which is a good sign that, but it's probably just part of a bear market rally. So another bounce towards the 200-day moving average. So there's some short-term gains to be made, but for any longer-term investors, no time to be invested yet. So that's it. I'm going to call it there, getting back in the saddle, if you like. I hope to have a couple more videos later this week, or maybe in the long weekend coming up, explaining a little more about what I'm looking for. So it gives you like a what to buy, how to find them, when to buy them, and then the holy grail, if you like, of investing trading, and that is your position sizing and risk management. So hope to have another series of videos coming out over the next week or so. Okay, that's it. Cheers, everyone.